Quick hits, part of the show where we talk about three things that's been in the news that some of you may have seen. First one here, inflation impacting Canadian retirement planning. Inflation is starting to eat away at our retirement savings. We can price in 2% inflation when we do these retirement plans. We can now price in maybe 3% inflation might be a better number to price in these days. And obviously, the higher the inflation rate, the more it eats into your future value of your RSP or your investment. So we'll touch on that. MAGA policies showing up in corporate earnings results calls. MAGA. This is basically the Make America Great Again. We're hearing more and more, obviously, about the president talking about making America great again, having all his policies geared towards helping Americans, helping people in the United States. How's that affecting CEOs and their businesses? That is something we'll talk about in our second quick hit. Third one, RSP contributions declining as economic challenges cut into retirement savings plans. We're hearing that people aren't investing as much in their RSPs. I think for some, they're looking at other ideas like tax-free savings accounts. Now that those can be, you can, for the life of the plan, put up to $102,000 per person if you were above the age of 18 back in 2009. So we're seeing that more people are putting money in TFSAs, where the rules around TFSAs are a little looser. You can pull money out whenever you want. Whatever the money grows to, you don't pay any tax on it. But the only issue there is you don't get a tax deduction for contributing to a TFSA. RSPs, you do. So let's talk about our first quick hit, inflation impacting Canadian retirement planning. And we can show our first, well, I don't know if it's a chart, but our first illustration here. BMO Retirement Survey, over 3/4 of Canadians worry that they will not have enough retirement savings amid inflation. Canadians believe they need an average of 1.54 million for retirement. Roughly 2/3 say rising prices are affecting their ability to save for retirement. Annual registered retirement savings plan contributions reach record high of just under $7,500. And so this pretty much sums it up, right? It says that on average, Canadians believe they need about $1.5 million to retire. I'm going to say I think it's just dependent on everyone, each themselves, meaning what your number or magic number is basically relative to you only. Someone else might have a different number. They might need more, they might need less. It'll depend on what lifestyle they need in retirement. But make no mistake about it, the Canadians are getting worried that because inflation has remained high for a little bit here, that it's definitely set them back a little bit with respect to their future retirement savings, what those retirement savings will look like. And so some Canadians may have to play catch up at some point in time down the road. Our second quick hit is one about the MAGA policies showing an uptick in corporate earnings calls. They're talking about things like tariffs. We have a chart here. How many times the word tariffs are being spoken about in corporate earnings calls? You can see here, this is a fascinating chart. You can see here back in 2019 and 20 and 2018, the Trump's first 4 years, how many times tariffs were mentioned in corporate earnings calls? Almost 500 times in 2018, 550 times in 2019. And you can see here in 2024, 175 times, and half of those mentions the word tariff happened in the last quarter, ramping up to the new Trump administration. You can already see in 2025, 191 times the word tariff has been mentioned in corporate earnings calls. Next chart, another fascinating chart, immigration. How many times immigration was mentioned? And you can see here also starting to move higher because, as we know, in the US, they're starting to talk about those that have come to the US illegally, sending them back to their place of origin. So MAGA, making America great again. This is something that, as I said earlier, CEOs are having to deal with, parse through, try to figure out as best they can. A lot of CEOs are taking more of a reactive role, which is what I've been telling investors with respect to investing. We can't try to be ahead of it because I don't even think the president knows what things will look like, a couple of months from now. So if he doesn't know, how are we supposed to know as investors and as CEOs of corporations? So MAGA, yes, it is definitely poking into a lot of CEO conference calls. Our third and last quick hit is this one about RSP contributions declining for Canadians. And we have that illustration here as well. 39% of Canadians plan to contribute to their RSP this year. Sharp 10-point drop from 2024 figures. 15% plan to contribute their maximum amount to RSP, a drop of 6 points from the previous year. Young Canadians 18 to 34 experiencing a notable decline, with just 41% planning to contribute, down 60% from the previous year. And 1 in 10 Canadians indicate they can't afford to invest in RSPs at all. And again, as I said, especially with the younger group, the younger generation, I think TFSAs is definitely taking a bite out of perhaps their RSP contributions, people moving money for now into TFSAs. And I recommend that. If you need an RSP deduction for income tax purposes, March 3rd coming up is the deadline for 2024 income tax. But if you don't need a tax deduction, TFSAs is definitely the way to go. So I'm not so concerned that people may not be contributing as much to RSPs as long as they're contributing to their TFSAs or other investment ideas, because I think over the long term, you want to maintain that momentum. You always want to put away money for your future and some savings for a rainy day. So very, very important. And to see some of these numbers pull back, I guess it's going to depend on the exact reasons why that is.